most effective trading strategy to blow your Forex account every time. Hey guys, Jeff here with the Forex Journey. I know it's kind of a funny title. I was being facetious. So this channel is all about Forex trading, prop firm trading, and also sharing our experiences with you, whether they've been good or bad. So the infamous strategy that we're going to talk about today is something that we've all done and we all still do. That would be trading impatiently, rushing into trades, getting sucked into FOMO. So in other words, the beloved emotional trading. So other than the examples that I already gave, so what does it mean to trade emotionally? So in the moment something happens, you rush into the entry, you don't follow your trading plan, you improvise, you stray from the rules you set for yourself based on how you feel in the moment, which could change every 5 minutes or every 30 minutes depending on how the candle closes. And with FOMO, so fear of missing out, it prompts awkward entries. My phone's going off here. It prompts awkward entries that are either too early or too late, but you don't want to miss out on a profitable trade. Your dreams are on the line, your rent has to be paid, so it's just your emotions just suck you into putting it all on the line anyways, even if, you know, with a cool mind you would not take that trade. So there's a saying out there that's said a lot in martial arts and different settings, but it's something along the lines of keep a warm heart but a cool head. So I mean, at the end of the day, we're gonna feel what we're gonna feel, and I mean, there's not much you can do about how you feel, but you can manage how you react to it so that no matter how you feel, you still keep your brain and you don't go all crazy. So the next thing that emotional trading will do is you'll go revenge trading. So let's say that you take an unprofitable trade, but you think like you're really set on your analysis. So then you're like, okay, well now I need to take a trade to make up for the loss. And then every extra trade that you take in the day after the first one, usually the quality of the analysis goes down. And especially if you took a losing trade and now you're trying to chase after just to make up, right, for your loss. And one last thing that I'll mention is that with emotional trading, we sometimes let our losses run, which basically means that you either take off your stop loss or you keep moving your stop loss, which totally defeats the purpose of having it there in the first place. And we'll sometimes close our wins too early because we don't feel confident that it's actually going to hit the take profit or, you know, whatever. So it's so funny because you'll let the losses keep going down, but you won't let the wins keep going up. So I mean, all those put together is just a cocktail for unpleasantness. So the opposite to that is trading patiently, with patience, or with discipline, which those are not sexy words. They're not words that people like to hear. Discipline sounds kind of negative, but at the end of the day, that's what you need. It is the opposite of trading with your emotions. And so what that means is that in the moment, you do follow your plan. No matter, you still feel your emotions, but you don't let them affect your trading as much. You still follow your rules and you trade what you see and not what you think or feel in the moment. And usually trading with discipline, you would take less trades since you're really only trading on the setups that you know and have properly prepared for and analyzed, instead of chasing after profits and taking revenge trades after the first one works or doesn't work and all that kind of stuff. Yeah, well, nothing's broken, but I was reaching for my glass to take a drink, then it, you know. Anyways, so trading with discipline, you stick to your take profit and your stop loss. Sometimes you may move your take profit up, but you're not going to move your stop loss down. So that mitigates risk and it helps keep your winning trades where they should be, you know, because it makes, like, there's no such thing as a risk reward ratio. If you're always moving stuff around, it doesn't make any sense. And also, a disciplined trader is going to not revenge trade, but recognize based on their logic or not emotion that if the analysis was good or bad, they may take another entry if they realize the entry was early or whatever, but it's not like a revenge trade. It's just sticking to your guns thinking that the entry was bad, but the analysis was good. And I'll actually show an example of that right now. Okay, so here we have an example of a trade that someone totally not me took. This was on British pound versus yen, so GBP, GBY. And essentially the idea here was that earlier in the day over here, it was going straight down, man. Like it was such on a run downwards. It went down by like each of these squares, these rectangles, each is 20 pips. So that's 1, 2, 3, 4, 5, 6, 7. Like it went over 100 pips down. And so I took the trade, obviously. We all know I took the trade. So it was looking to me like it was going to continue down. So I had set this level here, and there was a 30-minute that closed just below it. But I didn't wait for the candle to close. I just took the trade as soon as it broke something over here. As soon as the 30-minute closed, the next candle, it just shot right up, boom, and it hit my take profit straight up. It didn't even wick down at all. So looking back, I should have just waited a little bit, right? Having more confirmation, because I mean, it can't keep going down forever, and it had already moved so much. And this was like maybe an hour-ish, an hour and a half before New York opened. So I mean, there's still volume, but it wasn't like go time yet. And then here, it hit the top. There was a 15-minute that closed bearish, and I took another entry here, which was not smart. But so short version, the idea was good. Like it made sense that it was going to continue going down, but the two entries were bad, basically, is the point here. So what I could have done is just wait, right? So it kind of bounced, it went back up into the range, and then this was a good close below the previous candle, and anywhere here could have been a good time to enter based on a break, or I could have just waited again for this candle to actually close and then taken an entry around this area, and I still would have had a 60 pip range or so, depending on what my take profit was and all that kind of stuff. But this is a good example of like the idea was good, the entry was bad. And so even if I would have taken a third trade, so I stopped here to not overtrade, but even if I would have taken a third trade, I likely only would have made up my losses back, right? So that's the thing. Like if you take too many trades, if you rush into too many trades, I mean, it totally counterbalances your wins, you know? So it's important to, sometimes less is more. So that's basically what I wanted to share with you guys today, guys. Thanks so much for watching. If you'd like to support our channel, make sure you like and subscribe, and leave us a comment in the comment section. Let us know what comment you found most helpful and what's something that you're struggling with your trading journey. Just let us know. You know, we're all in the same boat together. And if you'd like to support the channel, yeah, we have some links in the description. Also gonna link around here in a moment a video of some backtesting that I did showing some trading examples and different strategies in a Forex simulator. That's been very helpful for us, and we like the simulator a lot. So yeah, that's about it for today. So we'll see you next time. Thanks for watching.